morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning, and specifically some of the sectors that we should keep an eye on. So the equity market still continues to be an uptrend. It's still being led by financials, technology, and industrial sector. However, there's one sector that hasn't really participated in this rally, and it looks like it finally may be starting to have a move. And specifically, I'm talking about the healthcare sector, and more specifically, the biotechs. And the reason I say this, the biotechs have been down, but I'm not sure they're exactly out. So last week, we saw a little bit change of pace, a little bit move. The XBI, which is the S&P 500 biotech index, basically was up 4% last week, the market leader. Similarly, the NASDAQ, the IBB, that's the NASDAQ biotech index, well, it's up about 3.2%. And the reason this is important is biotechs, in my opinion, are very, very cheap. So let's see what I'm talking about. Historically, over the last 10 years, the biotechs have basically traded at an average PE of about 19. Right now, they're trading a little bit over 14. And the low was in 2010, it traded about a PE of 14. And then in 2013, traded at a high of 31. Now looking forward, the price to earnings ratio for 2017 is at 11, a little bit below 11 actually, and for 2018 is just in the 10 range. So you see that's very cheap. So let's talk about why is this happening. Well, let's take a look at some of the earnings. Over the last 10 years, the biotech earnings have gone from, if you look at the S&P 500 biotech index, have gone from about $49 a share to $243 a share. That's a 366% increase over the last 10 years. However, the index returned about 277%, something 270%. So it's about 100% less return than what the actual earnings were doing. And so now looking forward, what are some of the estimates? Well, for 2017, the estimates are for about $283 a share. So that's about a 21% increase. And about $307 a share for 2018. That's about another 8% increase. So you see there's a lot of room there for the biotechs to move. So what happened? Well, most leading sectors, they can't lead for too long, they correct, and it's all kind of started when during her campaign, Hillary Clinton said she'd go after the biotech and pharma companies. Similarly, this year, President Trump, when he said biotechs are getting away with murder and other such rhetorics, the biotechs kind of continued to get hit. However, last Tuesday, after the pharma companies met with Donald Trump, it's hard to say what exactly went on in the meetings, but the market liked whatever they saw, and there was a big rally in biotechs. The IBB crossed above its 200-day moving average on big volume. That's a bullish sign, similarly with XBI. And as I mentioned, for the week, the XBI was up 4%, and the NASDAQ Biotech Index was up 3.2%. Now, with this in mind, also you have to keep in mind that global spending on medicine is projected to be about $1.5 trillion by 2021. That's about a $370 billion increase from what the spending is now. So that's over a 30% increase. So you see there's room for it to move. Now as far as specialty meds too, they account for maybe about 20% of that money, and that's supposed to increase to about 35% of that money. So again, that's something to take a look at. So now I've always said let price and volume be your guide, and for the time being, price has told us to stay away from that sector. But again, now price and volume is telling us that's a sector you might want to take a look at. Now some of the more speculative names were Ariad. They just actually got bought out by Takeda. It's Excelis, Tesaro, Insight Pharmaceutics. And then of course you have the standards, the ones that are making most of the money is Celgene, Gilead, Biogen, Amgen. So none of these are buy recommendations, nor is my telling you should buy the biotech index. You should always consult your financial advisor. However, full disclosure, we do own some of these names. We did start picking up some names in this index last week, and we're looking to possibly add to it if price and volume tells us that that's the thing to do. So once again, take a look at the biotech index. As always, let price and volume be your guide. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.